Hello, what's up, folks? Hope every one of you is doing well out there. This is your host Shahid Mahmood. Welcome to the short econ or the quick econ series of Cafe Iktisad or Cafe Econ. I'm an economist by profession with around 2 decades of experience in economic research, policy making, and social media engagements. Today's topic is related to the US Treasury market and whether if China pulls out of it, if China pulls out its investment in US Treasuries, would it still function well? Would it collapse? Would it take a beating? Now, this particular topic has been in the news for some time now. From time to time, this tends to come in this question of whether what would happen if the Chinese pull out their investment in U.S. Treasury market. It tends to come in the media, and people have opinions. Different people have different opinions on it. So about a week ago, there was another such article in the Financial Times, I believe, in which the writer he arguing based on the lower Chinese investment in the U.S. Treasury market. About 3 years or 5 years back, the total Chinese investment in the U.S. Treasury market was about $1.3 trillion. Now it's around 750 or 800 billion dollars. So he was discussing, or he was opining, whether this would have any impact upon the US Treasury markets, because a lot of people fear that the US Treasury market is going to take a beating if Chinese withdraw from that market. And another thing was that what was pointed out in this article was that Chinese are now taking out that money and investing in what the writer called the real assets. So what are they investing in? They are investing in, they're stocking up on minerals like copper, and rare earth minerals. They are investing more in one road, the OBOR, or one road initiative. I'm forgetting the full name of it. So it's basically infrastructure investment around the world, especially in Asia. And the third, he said that their domestic investment, the Chinese domestic investment, it's going to increase when the Chinese pull out that money and invest it in new technologies like 5G, microchips, green energy, and stuff like that. So the question, let's come to the question: what would happen if the Chinese keep pulling out this investment? Well, nothing's going to happen, and I'll tell you why. Well, first of all, as the article mentions itself, all that investment that the Chinese pulled out, the British took its place and became the second largest investor in US Treasuries. So there is a ready demand. In fact, there is a lot of demand for US Treasuries around the world because it's still the most liquid, most in sought investment avenue in the world. It's the safest, and the U.S. Treasury market and the U.S. government has a history behind it. It's more than 200 years of history of safe provision of assets, investment assets. No one in the world can match that. So, in other words, there is no substitute for US Treasuries. So even if the Chinese pull out their investment, it's not going to affect because other people would come in. The second point that one needs to be conscious of is you have to look at the numbers. Don't just look at the Chinese investment. So the Chinese, they've taken out about 500 or 600 billion rupees of their $600 billion of their investment, sorry. But the total size of the US Treasury market is $37 trillion. And I repeat that again, $37 trillion. So the foreign investments in the US Treasuries is only about 8 to 7%, 7 or 8%, which isn't much. So even if they pull out, it's not going to affect the US Treasury markets much because I said there is no. And why would they pull out? I mean, when they say that Chinese are completely going to pull out, there are repercussions for that. And the repercussions are that the Chinese are closely aligned. The Chinese export, the US market. The US market is a huge market for Chinese exports. So why would China want to completely disengage from the US market? Because again, there is no substitute for the US domestic market at the global level. Where would those Chinese exports go? Europe, no. Russia, no. China, sorry, Asia, maybe, but nothing compares to the size, dynamism, and the growth of the US market and its buying power, its purchasing power. So it's highly unlikely that China is going to completely disengage from the US Treasury market. Another thing to keep in mind is that it's just the figures for US Treasury markets. It doesn't say anything about the Chinese investment in other avenues in the US, and one of that is agency debt. That's another form of debt, and the Chinese investment over time has increased in that. So look up the numbers. So it's not just one avenue that Chinese are investing in the US. And last but not the least, again, it's a $37 trillion market, of which foreign governments are only 7 to 8% of the total market. The biggest investors are the ones based within the United States, who are known as the institutional investors, like money market funds, like retirement funds, like insurance funds. So, folks, even if the US, the summary of all this is that even if the Chinese pull out their investment, it's highly unlikely going to have any major effect upon the US Treasury markets. So, stay tuned for the Quick Econ series, the other editions that will be coming in the future. And you take care. And please don't forget to subscribe if you already haven't. Take care. I'll see you next time. Bye.